So essentially what we do is we tokenize real world assets, such as invoices. So I don't know how many of you have read about or come across invoice financing as a tool. What is invoice financing? It's essentially a short-term business loan to a business owner. So essentially, I am the seller of a product. There's a buyer. I will typically sell to the buyer on credit terms. So I will get paid, 30 to 90 days after I've actually, made the sale. Now I have, this account receivable, which is an asset in my books. But I don't have, I may have liquidity issues because maybe I've sold something for 10 lakhs. I need to pay I need to pay salaries to my employees. I need to pay other vendors that I may have. And essentially, I need to get liquidity from somewhere. So I have this asset sitting, which is this account receivable. There are certain platforms today in India as well, globally as well, where I can sell my asset, which is my account receivable, to other traders or trade financiers. And so say I'm supposed to receive 10 lakhs. These guys will say, okay, instead of giving you 10 lakhs, we'll give you 9 lakhs and you give us the asset at maturity. So 30 to 90 days from now, these guys will collect the entire 10 lakhs, netting that 1 lakh profit, and I get liquidity in the process. So essentially, these are the kinds of use cases that we are trying to facilitate at Persistence. And so similar to what Tarusha mentioned, where AutoPocket is looking to kind of tokenize different kinds of assets. Persistence does something similar, where we have different applications sitting on top of the Persistence chain. And each of these applications focuses on different kinds of real world assets. So the different real world assets could be invoices. It could be bills of lading. So bills of lading is essentially a document that when you're an exporter, once you load on the goods onto the ship. Usually the port authority or the shipping company itself will issue you a bill of lading, giving you ownership of the goods that you've just been loaded. Now, this bill of lading can be traded multiple times as well. So essentially, we're focused on two kinds of assets. One is things like invoices, bills of lading, which are all kind of business documents. On the other hand, we're focused on certain new age products like solar credits, social impact bonds, renewable energy credits, and then some crypto native products like staking derivatives and things like that. If some of you have been following the staking ecosystem very closely. What we do, and I think one kind of fundamental difference in the architecture or in terms of the approach between how AutoPocket is approaching this and how we're approaching this, is when you want to tokenize business documents. Essentially, what we do is most business documents are actually already digital, but some in certain traditional industries, these business documents can actually still be paper documents. So depending on whether these whether these documents are business document, whether they're digital or paper based, we'll essentially convert them we'll document fingerprint and essentially capture all the metadata of each of these documents, and use an NFT to represent these business documents. Why do we use NFTs? Because each document is unique. So unlike gold, where every bar of gold or every coin of gold is essentially fungible as long as the carats or the weight or some other properties are the same. So you would be indifferent between getting 10 grams of one coin of a 10 gram gold coin, or 10 coins of 1 gram gold coins. But essentially, it's different when it comes to business documents. So essentially, what we do is we use NFTs where each document is not fungible. 100 tons of wheat originating from Canada is different from 100 tons of wheat or corn originating from, say, Australia. And so that's why we, and as some of you who are native to blockchain would know, an NFT, like a collectible, like a crypto kitty, or like say a Pokemon represented by an NFT. Each Pokemon is unique with some unique characteristics. We've just used that concept in business documents where each business document is unique. And so we represent these business documents using NFTs. Once these business documents are tokenized using these NFTs, they can be easily traded. They can be easily used as collateral to borrow and lend against. Now, like I said, our primary focus is, mostly institutional traders, family offices. But as the crypto market cap is growing, we're, increasingly focusing. We're going to be increasingly focusing on the crypto native market as well. So in addition to working with kind of institutional traders, institutional financiers, we'll be working with, like, for example, the stablecoin holders, so the large whales who can, do up to like 100K to 500K, or even smaller lenders. So you're sitting on, say, $500 of USDT, which you got on WazirX or one of the crypto exchange platforms, and you want to earn some yield. You go to Bank of Hodlers, they'll give you about 11%, and you come to our platform, we'll give you somewhere between say 12 to 18% returns on your stable coins, which can be pretty attractive. The second point is, if we look at the context of the world today, so Tarusha mentioned the no territory aspect of it, or the borderless aspect, as we call it. Uh, Today, we live in a zero interest environment in most parts of the developed world, or negative interest rates even. So I think there's about $13 trillion worth of capital that is sitting in negative yielding bonds today in Europe, in Japan, and increasingly so in the US. Whereas in India, you can actually still generate decent yield. If you finance these invoices, you can still generate decent yield, 12 to 18%. And agreed, there may be certain amount of counterparty risk, credit risk involved with financing such instruments. But net, is it still, if you compare the risk, is it still better to earn negative interest rate, or maybe earn maybe not 12 to 18% overall, but say maybe generate 10 to 12% after some of the defaults or things like that, non-payments, and things like that. So essentially what we're trying to do is facilitate more efficient flow of capital around the world in a borderless, permissionless manner, for both retail as well as institutional clients, where we can have folks from the developing world allocate capital to the developed world in a currency hedged manner, which becomes a win-win-win. It's a win for us, obviously, as a company. It's a win for the developed world, where people are able to generate yield on their on the fiat money that they're holding on, and find other avenues to invest. And it's a win for business owners who need short-term business financing, but may not be able to go to the bank to get financing. So essentially, this is how we're doing it. So it's sitting at the confluence of tokenizing real world assets, leveraging features from decentralized finance, open finance, and then using non-fungible tokens to tokenize these assets. I want to, I know there's about 17 minutes left. I know there's some questions coming up. So definitely want to spend some time on the questions. But essentially, that is one last point. Sorry, I forgot to mention. So essentially today, what do we have actually in terms of a working product? I know Shantanu asked me not to talk too much about persistence, so I'm refraining from talking too much about the company. But essentially, today what we're doing is we have a commodity marketplace, so trading of physical commodities, and it's commodity agnostic. So commodities like metals, and when I say metals, I mean more like copper, aluminum. I don't mean precious metals. Livestock, energy products, so things like palm oil, coal, and products like grains, so soya, wheat, things like that. So these are the products that are being traded and trade financed on Comdex today. Comdex is a Singapore-based commodity trading platform. It has processed about $30 million worth of trades today. It has offices across, Singapore, Hong Kong, Dubai, Kuala Lumpur, which are in Asia, kind of the highest, trading volume corridors. And currently, as I mentioned, more focused on institutional folks, but we're coming out with our more retail-focused product as well. That's the end of my presentation.